You may be in the exact same tax situation as Sam Darnold and owe, I don't know, $250,000. Hey there, Ken French, vastsolutionsgroup.com, wrote ModernMillions.ai, make millions, save millions, protect millions, all with the use of artificial intelligence. I'm here to help you not have the same situation as Sam Darnold. Yes, Sam Darnold owes $250,000 for playing in the Super Bowl, if you really think about it. Why is that? Well, whenever he's playing in California, well, the beautiful sport of football, he ends up owing money. That's the way our tax laws are written. And as such, he ends up owing about $250,000. Believe it or not, he made about $178,000 in the Super Bowl, but it doesn't matter because all the money, all the days he'd spent down in California practicing, getting prepared, duty days as they call them, and also during the season, he ends up owing money, sadly, but it is the way it is. By the way, that's also the case for you. Let's say you have a second home. Lots of people do have a second home that live where I live, Bainbridge Island. They go down to California. And well, let's say they're at their summer home, they're doing some work. They end up getting some business from the state of California. Well, believe it or not, they're supposed to be giving money to California. Are you in that same situation? Well, if so, there's some work to do. What we have done here at vastsolutionsgroup.com is have a AI model, artificial intelligence model we call Einstein, to help kind of mitigate that, to help our clients realize that stuff like that might happen, because that's a really, really big issue. It's not only in California, it's a number of different states, and one has to be careful of that. That's the reason we have employed artificial intelligence to help us make sure that our clients are taken care of in that regard. If you're not thinking about doing tax projections, you're going to potentially owe some tax dollars. You don't want to be one of those people who's paying, X number of tax dollars. April 15th comes, right? No, you don't want to do. What you want to do is think proactively at the beginning of the year, January 1st, let's say, work forward, then backwards. Try to figure out what your tax liability is going to be based on your cash flow, and then work backwards. That's a smart thing to do. Now, I know it sounds a little funny to be talking about artificial intelligence and tax, but they do go hand in hand. Hence the reason I wrote, again, ModernMillions.ai, how to make millions, save millions, protect millions. By the way, it is a number one Amazon bestseller in the entrepreneurship space. Now, it's technical, yes, but at the same time, artificial intelligence, you don't only have to use our model. You can you could plug in your information into Claude, ChatGPT, any of the AI or large language models, and you can actually get a lot of help, a lot more help than you would ever think out of one of those models. The reason we like to think we're pretty good at it because we started in 2018. We really started playing with artificial intelligence back in 2010. And by the way, it's been around for a long time. But what I would say is, even now, let's just say it's early in the year for you, wherever you are, um, early in your, let's say, fiscal year, try to figure out what your cash flow is going to be and try to figure out what your tax liability is going to be. And now there are ways. Now, by the way, even California, as an example, is starting to use artificial intelligence to be able to figure out the number of days that these pro athletes or even celebrities are earning money in their state, because they want their paws on that money, right? On that tax money. So what they're doing is using artificial intelligence. So if they, as a state, in this case California, are using strategies utilizing artificial intelligence, you on the other side, legally, ethically, and morally should be using artificial intelligence to help you in that circumstance also. Now, there's really not much for the most part, Sam Darnold could do. By the way, it's not only Sam Darnold, it's any professional athlete in this case. I mean, but wait, one smart thing to do is have a domicile that's outside of, depending on the circumstance, outside of certain states where you have income tax. Washington, where he lives right now, doesn't have an income tax. But really, by the way, we're not his advisor. We work with a lot of professional athletes. I know his circumstance specifically, but you can be domiciled or place your let's call it headquarters, your corporate headquarters in another state, and then you can end up working from that state. That could mitigate some of your taxes, as an example. There's a lot of little strategies you could do, and that's we came to know some of those strategies based on artificial intelligence. I guess this is more of a lesson about artificial intelligence in a way of helping business owners to be able to figure out what to do to strategize so you're not getting hit with large tax bills, because artificial intelligence can help you. Just as I mentioned, artificial intelligence is being used by the state. So we as taxpayers should also be using artificial intelligence. And for our model, here's one example. We have this relatively new bookkeeping service we call Vast Bookie. And basically what we do is it's free service for the first entity, and thereafter it's only $10. And instead of having people pay, as an example, for software, bookkeeping software, or for a bookkeeper that can use the software. Anyway, so what I was going to say is, as an example, even for his circumstance, he could track the states in which he works based on artificial intelligence in that software, and it could help him to mitigate, to truly realize if he has to pay tax, when he has to pay taxes, et cetera, et cetera. Because, by the way, sometimes the states do get it wrong. So by this free bookkeeping software and bookkeeping app platform, et cetera, it can help him to mitigate that. And by the way, as an example, even when he practices in that state, he's earning, in this example, California, he's earning he's earning money from his base salary, and then all his bonuses too. So he's got to pay taxes on all that. On all that, it's prorated out. And by the way, I'm sure he's happy because he ended up winning the Super Bowl. So in the whole scheme of things, I'm sure he's got no qualms, but he's probably gladly paying for the taxes. But that's a lot of money to pay in taxes if you really think about it. So I guess the takeaway is use artificial intelligence to um, help you in your circumstance. Because again, you don't want a bookkeeping error to go awry, and you end up paying more than you should just because maybe California got it wrong, or you're not maybe you don't want to go a day early, as an example. Maybe you could do your paperwork, as an example, from another state, whereas you're not getting earnings from a state, as an example, which will hit you with income tax or whatever the tax would be called. And each tax, each tax is differently stated in various different states. I'm also going to make mention of one other thing. It's probably important: expenses. It's really important for him to outline his expenses, i.e. deductions, when he's working in another state. In this example, California. A lot of people don't realize that. Sometimes they do have, or you, as an example, as a business owner, will have some expenses that need to be taken into account. So I would say that also could potentially bring down your tax liability. If you end up having some expenses, in this case, let's say California, from Washington, again, I live on Bainbridge Island. So let's say, let's just use Sam Darnold as an example. He's down in California. And he has a bunch of expenses. He can end up putting them through our software or his software, whatever the case is for bookkeeping, and then lower the tax liability because he's stating whatever his expenses are in that state when he's working there in that circumstance. Now, some people would say, well, is that a big deal? Well, the answer to that is yes, it could be. It could truly bring down his tax liability. I don't know what his expenses would be in California, but when he pays for expenses in California, he ends up netting. So let's say his gross is, to be simple, 100,000, and then he has a bunch of expenses, making this up 25,000, just so you can understand a little bit, ends up lowering his tax liability. And again, artificial intelligence will help to figure out what is the best benefit in his circumstance. Um, what I would say is I really do appreciate you taking the time. This is a quick one. I just want to, um, what an exciting run it's been for the Seattle Seahawks. Since I'm a Northwesterner, I gotta take some pride in the fact that our football team ended up winning a Super Bowl in such great fashion. Number one, then number two, I'm just trying to open the door and remind people that artificial intelligence is really beneficial for people who are thinking about their taxes, their net worth, increasing their net worth, and also asset protection and estate planning, which I've been a big advocate for. And once again, I'm going to throw out the book, ModernMillions.ai, Make Millions, Save Millions, Protect Millions, all with the use of artificial intelligence. And once again, it was number one bestseller in the entrepreneurship category at Amazon. I really do appreciate you taking the time. Hopefully, this has been helpful for you. And whenever you're working, in another state, you got to think about it. You got to think about which here it's called the star tax. You got to really think about it. So, by the way, we have a new community that's called the Vast Vault, and it's really exploding. It's really exploding. So, if you're interested in any way, please go ahead and go to vastsolutionsgroup.com. By the way, they have sponsored this episode of What's Kenner French Thinking. Go to Vast Vault. For limited time, I'm going to say to the end of February, if you are interested in the Vast Vault, because the sponsor is vastsolutionsgroup.com, which runs the Vast Vault, our community at vastsolutionsgroup.com, the $199 a month fee that normally exists, that's waived for at least for 6 months. For 6 months, I should say. So if you're interested, right now is the time to get involved. in the Vast Vault. Again, this episode's sponsored by VastSolutionsGroup.com. We really appreciate you being here. You're going to get 6 months off the $199 a month fee for being a member of the Vast Vault. Or I said member, it's really truly what we call a key holder. And it's a lot of good value. I mean, we only, obviously, from watching and listening to these episodes, we have people such as Ron LeGrand, who's been presented in the Vast Vault a number of times, Sharon Lecter, Laurel Langmeyer, who I was just texting, as a matter of fact, Jonathan Kronstadt. There's a long, long list of people who've added value. So when you're a key holder, you're not only learning a little bit about, about strategies that can add value to you. You're also learning about ways to, take your business to the next level as far as artificial intelligence, wealth management, real estate, and the list goes on. But anyway, once again, I just want to say thank you very much. Hopefully that 6-month gift that basically is coming on behalf of VastSolutionsGroup.com can add some value to you, the business owner, because we really appreciate our business owners out there, because that's our main market, and people who've gravitated towards our Vast Vault. Really appreciate it.